Hi, welcome to YWR. We're going to have another tech talk today because it's been brought to my attention by a few readers that I spent a lot of time talking about the investing tools that we've built, like the global factor model and QARV, but I don't spend enough time explaining what they are and how to use them and the thinking behind them. So we'll go over those two today. I also want to show you some of the resources on the YWR website where you can find things, and hopefully it all ties in together and you'll understand what these tools are when we refer to them, and also be getting a lot more value out of your YWR subscription and hopefully be a better investor too. So let's start with the website at www.ywr.world. Okay, so just along the top here are all these tabs: the data apps, portfolios, global factor, and QRV, data models, library, other cool things. So if you ever want to see, so I will put the links to things at the bottom of a post, but if you're, a couple days down the road or a week or whatever, and you ever want to see the global factor model dashboard, the link is there. Same thing with the QARV dashboard and the Tableau visualization dashboard. You can click in there and on that tab and get to them. Another thing is portfolios. So I talk about a lot of stocks, and it's great to have good ideas every week or 2 times a week or whatever, but I also want to be clear as much as possible what I'm doing, so you know where I've actually got money deployed. It's always important, where have you put your money where your mouth is. And so if you go in here, I also have also behind this we have 2 themes we're tracking right now, which are the dirty dividends and the cash dragons. So you can see what's in these themes. This is the first one, is dirty dividends, and I try to update these quarterly with what's in the theme and how much, what my percentage, how I've weighted them, and some of the fundamental data on them. There isn't much turnover to these. There could be in the future, maybe something will happen and I radically shift things around, but generally you'll notice that they don't change much. And the idea here is to make these as easy as possible for you to follow. Here at the bottom, I've provided links to some models that are in these portfolios. Scrolling down here, we have the cash dragons, which are a bunch of Chinese stocks, which we started last year. And here's some links to the models. And then finally, because maybe you're thinking, well, how big are you in these themes? Are they a big part of your overall, portfolio allocation or not? And so here I try to show everything that I'm doing between S&P index funds, NASDAQ funds, gold, the themes, other stuff I own in. So you have that every quarter too. So I update that every quarter. You should get a basic idea of what I'm doing. Also here, so this is also for the global factor model and the QARV. This is where you can get links to the Google Sheets. The other one was a data app on using Retool. These are where you can get a Google Sheet version, just to quickly show you something like that, right? Sorry, back to so the Google Sheets, data and models. So I like to provide, when I go in depth on a stock, as much as possible, I like to build an earnings model about it. So if you come over here to data and models, sorry, whenever I update a model, the link is here. And earnings modeling is really good. It's very time intensive, but it does really give you an idea of the company, how it reports, the segments, and you get a sense of the variability of the earnings, how they could be much higher than people expect, what are the assumptions, and I really value it, but I do understand it's quite takes a lot of time. But where I've done updated models, you can find them there. Library, so this is where I put presentations. So every month I do the killer charts presentation. Whenever I build a presentation, they're in here, but then also when I come across things I find interesting, presentations by companies or analysts, I put them in here too. So just interesting stuff I've come across. I want to share it with you, and there's links to the Google Drive. Other cool things is just videos and songs I like. So you could go one tab of our YWR is just other cool things. Okay, now let's start with the data app. So just to say, run back one quick. So here's a post recently on the global factor model, right? So I talk about it just to show you. At the bottom are these links as well. I showed you where to get them on the website, but they're often at the bottom of the website. Global factor model dashboard, factor model Google Sheets, factor model Tableau Viz. So what's the global factor model dashboard? I wrote a long post about why estimate revisions work. And I think I will refer you to that to go into the long story of estimate revisions. The short story is estimate revisions are really interesting. Let me go back another thing. In the asset management industry, when an investor meets with you, they will often ask, well, how do you 5 analysts sitting in an office somewhere in New York or San Francisco or London keep track of what's going on around the world? There's so many companies, there's so much news every day, the world is changing. How do you cover what's going on? How are you 5 guys or whatever so on top of things more than anyone else? And our answer to that is the global factor model. So what we do is we use data screening to try and surface and catch trends in the world. And the primary tool for that is the estimate revision. Now, if you think about it, all around the world, there are sell-side analysts that could be 3 to 10 covering a company. They're experts on these companies. They meet them all the time. They listen to every conference call. They know every product. They know the whole industry. And every few months, they put out their estimate of the future earnings of the company based on this amalgamation of knowledge they have about the entire world and the sector and the companies. It's an extremely thoughtful, insightful, expert opinion about the future. And yet, these estimates are always changing. So that's what we call estimate revisions. Estimate revisions are the changes in sell-side estimates. And what it means is something is happening. There is some story unfolding that was unexpected by these experts just a month ago. And so what we do with the factor model is we look at the changes in these earnings estimates for this year and next year over the last 180 days. And we start to we look at the percentage change in these estimates, and then we rank them from 1 to 100. Companies that score 100 have the largest earnings estimate revision of any company in the universe that we're covering. And what's this telling us is we're basically, when we run these scores and we look at the estimate scores, these companies, something is happening that the world did not expect, that the experts did not expect. And when you click into this dashboard, you can see Sumitomo Pharma has an estimate revision score of 100. When you click on that stock, it fires off the estimate revision chart here. So what you can see is how the current year estimate went from minus 28 yen to 166 yen over the last year. So a big change in how much people thought. Sumitomo Pharma wasn't even supposed to make money a year ago. No one thought it'd make money. Now it's becoming quite profitable. The other score is the value score, which is where I wrap up around, I'm trying to think, maybe 4 or 5 different valuation metrics into one composite score for value. It's price to earnings, current year and next year, price to book, and dividend yield, all into one composite score. Price momentum also looks at the price change over the last 180 days and gives you a composite score for the price momentum. Total score brings all these three together. I weight these 60% estimates, 30% value, 10% price momentum. That is my personal preference. And you can, just to say, that's why this Google Sheet is interesting, because you can actually take that data. If you want, you can download this to Excel and reweight them differently if you like. So what I'd like to do is, so also there's a new feature. So I'm going to show you. You notice I clicked on Micron, right? Big change in earnings estimates over the last month. So let me go back. What I like here is I look through which companies have the highest earnings estimate momentum. And that's interesting when we're going back to being asked, how do you cover things? With this, we are able to basically, when we look at these positive estimate momentum scores, or conversely, the negative estimate momentum scores, the companies that score the worst, we're able to see the big stories in the market. What is happening? Where are estimates, where are companies making a lot more than surprising everybody, and on the positive side and the negative side? One theme, for example, right now is memory chips. And that's why you have stuff like Micron beating estimates. And then what I like to go into is like, okay, so what's going on? Why are these companies beating numbers? Why are they not? So that's, and then valuation is just to say, when we're looking for ideas, I ideally like to combine this positive estimate momentum with an attractive valuation and a little bit of positive price momentum. So that's the combination I like. Now, what I showed you was this new button, which I've already pushed, which is the AI report. So say we're scrolling through all these things and we see something interesting like Micron, and we want to know, okay, well, we might not have looked at Micron in a long time, or might not actually be familiar with what it is. You fire this button and it will launch a YWR AI report. It takes about 3 minutes to run, so just be patient. But then when it comes up, you got this long report about, first of all, there's a summary, there's some valuation metrics, historical data on price to sales, and then, about the business, the competitive moats, whether it's a monopoly, a duopoly, customer stickiness, bull case, bear case. This is all driven by a combination of financial data and AI prompting. A part I love, and I've done a video about these calls, but I think it's a really cool report, and it's just going to get better. But one of the things at the end, which is really cool, is we do a 3-quarter, we analyze, the AI analyzes the transcripts over the last 3 quarters. What has changed? How are the questions changing? If there is Q&A, how is the management talking? What's the momentum in the earnings? What's the story over the last 3 quarters? I think it's a very useful part of the report, and I highly recommend it. And then at the end, it goes through and tries to find any red flags. So super useful tool. You can just click on that button anytime, and you can download it as well. So what we have here, and you can see it loads 109 stocks at a time. And you can just sort and filter on these different scores and go through and start looking for, this is what shows us what's happening across the world. Now, as I said, there's the Google Sheet where you can download this to Excel. Now, finally, I don't talk about this that much, but there's a Tableau visualization. And this is where I try the factor model dashboard was on a stock level basis. This is where I try to do things more on an industry basis. Now, sometimes you might want to just know like which sectors, which industries have the best earnings momentum. And for example, this is loading for some reason. We'll refire it. Okay, so here's how this could be useful. I'm going to show you 2 different ways. Industry estimate momentum. When I showed you the total scores, that was at the company level, and it was a combination of earned estimates, value, and price. Maybe we just want to look which industries in the world have the best estimate momentum. Newspapers, I'm not going to go into because it's a very small sector of 4 companies, and it's really driven by a funny, kind of a data funny. Precious metals, okay? We know gold miners are doing well. Why are investment banks and brokers basically the second best industry globally for estimate momentum? Kind of interesting, right? Not something you would have read about. We've read about, and everyone gets why gold miners are going up. What's the deal with investment banks? You click in here. Now see here, this little button is the data. We want to see all the stocks. Now again, I'm going to full data, click full data. I'm going to sort these, make sure it's descending. Okay. These are Goulion Minsheng Securities, Sinolink Securities, Orient Securities, Tel Aviv Stock Exchange, China International. These Robinhood. Most of these are Chinese and Korean brokerages, Coinbase. The point is, the Korean market and the Chinese stock market are going through the roof, and all these local brokers in Hong Kong and China and in Seoul are making lots of money because people are trading their brains out. This sector has a lot of momentum. And it's maybe interesting because you probably didn't know. I didn't realize chemicals and agricultural, for example. Again, go in. Why is agricultural chemicals? I didn't expect that to be such a good sector. Again, we go into the full data and we see, so I make sure it's sorted descending. I did that wrong. Descending. Okay. Some fertilizer companies I haven't heard of, but then you go CF Industries, Mosaic, Nutrien, Sabic, Yara. Fertilizers are moving, estimates are moving up. Okay, that's interesting. Maybe not something people are talking about. Now, I want to also go into this scatter chart because I just want to notice this is the dashboard with all these things. You can go into each of these dive into these where you just shows the full screen with the one tool. Now, often when you're looking at estimate momentum and you're looking at companies with high estimate momentum, often the market has already reacted. So it's interesting to find stocks where the estimate momentum is high, but the price momentum is not. So you just need to, so what we're looking at here is these are stocks where the estimate momentum score is over 70, but price momentum is less than 50. So what's interesting is basically anything in this box could be interesting, but the more you get up into this left box is where it kind of the extreme situations. I would just also caution though to be careful and check this data because there can be funnies. I'm going to give you an example of Hino Motors here. Hino Motors is a Japanese truck manufacturing company. Okay, looks great. Estimate momentum score 94. Price momentum is 9. If you look at a chart of Hino Motors, looks cool. All down. Wouldn't that be great if it was what we thought it was? Let's go back to our dashboard. I want to show you this. Let's add a filter here, filter rule. We're going to search for Hino. Okay, Hino Motors, there it is. Click into it. That's the estimate revision chart for Hino Motors. As you can see, there is a big change in the FY1 earnings estimates from minus 400 yen to 36. But that's probably some funny one-off charge that fell out of the numbers or changed. If you look at FY2, FY3, there's nothing happening here. Okay, this is not what we're looking for. The data has caught a funny with Hino Motors. This is not an upwardly trending estimate revision stock. Okay, so let's go back to our scatter board. Let's find something else. Hays. Hays is a UK, I think, business services stock. I don't remember exactly what they do. But as you see, estimate score is 97, price momentum is 1. Let's take a quick look at the chart. Hayes. Right, it's done nothing. It's gone from 164 pence down to 56. But our tool is saying there's positive estimate momentum. So let's go back and let's take a look at Hayes. I'm filtering by name here just to find it. This is actually could be very interesting. Estimates here, if you see, have been falling for 10 months. Then just in the last 2 months, people have moved up numbers from 1p to 2, from 2p to 4, from 4 to 6. So something has changed with Hayes. Now, what I would probably do now is fire off an AI report and find out what the story is with Hayes. But I won't do that now. So now let's go to, we're going to go to another data app. Let's go to, let's go to QARV, and I'll explain the difference. Okay, so this is QARV, and there's a different concept at work here. In the global factor model, we are screening for changes in earnings estimate momentum. And what that tends to bring up 2 things. One could be a big change. There's always a big change going on in the company, but what it tends to skew towards is cyclical industries, commodity industries, container shipping, where the earnings are quite variable. So you'll get big changes in earnings, and so it'll kind of bring up these companies where the earnings tend to change a lot. Contrast that with, say, a supermarket or a utility, where the company may be growing each year, but it just kind of does what everyone expects. So if you're a sell-side analyst covering the supermarket, you predict that the earnings will grow 67% next year, and it does it, and then it does it again the year after and the year after. And that's wonderful, but it's not going to show up on an estimate revision chart. Something new and exciting. It's more steady Eddie, and it's growing, and it's delivering exactly what the analysts were expecting. So it doesn't show up as creating fireworks and estimate revisions or show up in the factor model. Doesn't mean it's a bad company though. So what we're looking for with QARV, which stands for quality at a reasonable value, we're looking at companies that are generating very high return on equity over a period of time, that are actually also at a reasonable valuation. So what we're doing here, so this data is much more slow moving. And so month to month, the QARV results, the global factor model results change quite often because there's a lot of changes to earnings estimates, and it's exciting. There's always new companies to talk about. QARV is a bit different. It's using one of the biggest variables is the 5-year average ROE. Now that only changes once a year, right? So it's using fiscal year data. So those companies, that data, same with ROA, average net debt, these things don't change very much. So the QARV, the only part that would change is sometimes the valuation. If the stock is moving around, the relative valuation score will change. And so what we're looking for here are companies that are consistently profitable, but for some reason are trading at a kind of low valuation, unexpectedly low valuation given their profitability. And so you come across here, there's a lot of, I first give the subcomponents that I'm using: net debt, earnings variance, EPS growth, and then that rolls up to a score. So going over here. Comes over here to create a quality score, a value score, and a total score. And then all this means when I do quality rank, value rank, total rank, is I'm just deciling them. So You know, depending on everybody's scores, you might them. It's like a curve in class, right? The best guy got a 63 out of 100, and so I've kind of re-rated him to the best. If the best is 63, that gets 100. So I've deciled everything. So you now can look at which companies have the best average ROEs and how they score on value, and then how it comes together. I weight them together to create a value rank, a total rank, which is 70% quality, 30% value. And what we found, actually, surprisingly, is that Chinese Baiju companies actually score extremely well. They're very profitable, and they're quite, you know, 28 to 40% ROEs, but with quite low valuations at 14 times earnings. So that's how I find kind of interesting theme, interesting stocks that are good companies that are very profitable, trading at low valuations or relatively attractive valuations. But different strategy, right? Here we're looking for maybe long-term growers, things that we're going to own for several years. And we kind of get into the story. Why are these companies trading at quite low valuations relative when they've been quite profitable over the last 5 years? With Baiju, with Chinese Baiju stocks, there was a crackdown on drinking by politicians, which kind of made the earnings soft for a couple of years. But maybe you could take the bet that actually this is actually going to continue to be a growth industry. It's actually kind of a luxury good in China, like almost like a whiskey company. Other things that have shown up, again, container shipping, for example, has been very profitable the last 5 years when there's multiple disruptions to container shipping with COVID, the Red Sea, the Panama Canal. And so shipping rates have been quite high. And so average 5-year ROE for container shipping has been quite high. And yet the market thinks it's a bunch of one-offs. It's not sustainable. Container shipping is not a good business. And so you see that the ROEs for container shipping companies are often, let's look at Costco shipping. Yeah. 5-year ROE has been 44%. Trades at a PE of 7 times. So it scores very well as well. So it's interesting to look at that, and maybe you could take a view that there's something different going on with container shipping. Those are the tools. That's the basics of how I use them. I hope that's helpful, and then we'll probably talk about them more, but that should clear up a little bit the difference between the global factor model, how it differs from QARV, and where all these tools are on the YWR website. Thank you.